Now, some are disappointed that the SEC is poised to approve a Bitcoin futures ETF, but not a pure play Bitcoin ETF.
What does it mean for the broader positioning across crypto? Obviously, very, very strong. And it obviously means we're looking for second and third level Bitcoin plays.
Of the one crypto network, which successfully took root and decentralized. If I create a virtual world and I design in it a virtual money or a virtual token, and then I stake that virtual token to secure a virtual network so that people can trade, virtual goods and virtual things. Mm-hmm. I can create virtual security, but it's virtually certain, right, that someone's going to create another virtual world. The problem is, you outsmarted yourself. You created something which was free and easy, which means that the guy that copied whatever to create Ethereum, well, then the guy copies Ethereum to create Cardano, and then someone copies Cardano to create the Uniswap, and then they make Sushi Swap, and then they make the next thing because you can do it fast and easy. What you've done is you've created a virtual casino or a virtual world and virtual money. And it's not that you can't create a business around it. Like Second Life is a business, right? Fortnite is a business.
Right.
Online gambling is a business. You can create a virtual casino or a virtual game or a virtual world, Dungeons and Dragons, and you can live in it. You can buy your virtual Vorpal blade and you can use it to kill the virtual dragon. But the problem is you don't have a bridge to the thermodynamic real world, right? Nor do you have a political bridge to the political world. Yeah. And you have lost the space-time constants that give the property integrity and durability. Mm. And that's probably, it's a good segue for me to go to layers 6 and 7. Mm-hmm. The 6th layer is the spatial layer, and the 7th layer is the temporal layer. I guess coming back to the other elephant in the room here, Bitcoin is a successful proof of work network that has created our first digital money. There are no successful examples of a proof of stake network succeeding as digital property. We've never gotten what would be required to be successful. Well, here's a simple one. If the United States government designated a proof of stake network as property and not a security, it's never happened. Mm-hmm. In fact, the head of the SEC just went on television and said, if there's an ICO and there's a shared enterprise with intent to profit, then it's a security.
Yeah.
So as far as I can see, every proof of stake network that's been launched looks to be, by legal definition, a security, not property. Mm-hmm. And even Ethereum isn't a proof of stake network. So there's a debate about whether it is property or not, and that'll eventually be resolved. There's absolutely no question that at this point, the only successful digital property that's ever been created in the history of the world was created on a proof of work network. Everything else is just like a garage science experiment.
Right.
And it's not clear whether they can successfully decentralize. I mean, theoretically, new things are possible, but practically speaking, we have one example of crypto property or crypto money. Yeah. That is Bitcoin. And everything else is a speculation. The space-time functioning of Bitcoin is important. You don't want it to move fast. This is why, a lot of maneuvering back and forth, but at the end of the day, the immediate a priori observation is they shouldn't have tried to change anything. It was a mistake to try to change the block size. It's a mistake to change the frequency. When you create a crypto universe or a crypto creature, The block size and the frequency of the network are akin to the space-time constants of the universe. It's like trying to change the gravitational constant and the speed of light. It's like you don't get to play God except once. If Satoshi had designed the network with 1.2 megabyte blocks and 8-minute frequency, it might have worked. And there are some parameters that wouldn't have worked, and it started to spin, then you don't change it. The size of the block size is kind of like the packing density of carbon atoms. If you were to change the speed of light or the gravitational constant, let's say you change gravity on the surface of the Earth. Let's say I made it 3x what it is right now. What happens to every creature, every bridge, every building, every plant, every factory? What happens when I crank up the gravitational constant by a factor of 3? The foolishness of like doubling the block size, which is what the big blockers wanted to do, is if they had doubled the block size over and over again, they would have driven transaction fees to zero. When transactions fees go to zero, the revenue of the Bitcoin mining business is dramatically changed. Now there's no future revenue model. Now you have miners lobbying to change the block reward. You would basically bankrupt the mining business, screw it all up, and then you would have you've got no security network because I can't afford to actually secure the network. So what they were imagining a world where everything had to be on the base layer, and they're monkeying with the base layer. And instead, what they should have seen is that the world is in layers. The key is the base layer of Bitcoin is like the granite underlying Manhattan, right? But the point is, you can't build a city that's going to last 1,000 years on mud and on sand. If you have an understanding of the universe is layers and layers, and the consequences of the speed of sound is everything that flies through the air, and the consequence of the speed of light is everything in the universe, and the consequence of the gravitational constant is how the water flows and how the mountains move. And once you understand those things, you can build everything that humanity's done in the history of the human race is predicated upon those space-time constants being what they were. In the defense of the big blockers, the Lightning Network was not as manifestly clear today, but if all you have to do is look at a Lightning wallet and a Lightning transaction, and look at a layer 2 and a layer 3 transaction, look at how Square Cash App works, look at how Moon works. I can send 1,000 sats in a split second for 1 sat. Once you see that, you realize layer 2 platforms, layer 3 applications are going to move Bitcoin at the speed of light in an almost friction-free way. And what did you really want from Bitcoin? You wanted it to not break.
Yeah, right.
It's foolish to risk the immortality of Bitcoin in order to go from 1 megabyte to 2 megabyte blocks. You could have had something that would be immortal, and you could build a civilization that would last for 10,000 years, and you could just do it using layer 2 and layer 3 apps. But instead, we're risking putting out the fire of civilization to try to change the space-time coefficients of the one crypto network, which successfully took root and decentralized. I think the summary here is Bitcoin has created digital money, digital property, if you will, either, on top of a decentralized proof of work network, other proof of work networks that are much smaller and less successful, that are less decentralized, that are struggling to a degree, not winning against Bitcoin. And there are other theoretical approaches to creating a decentralized network. None of them have succeeded to date. If the definition of success is to be deemed morally and legally as property by a legitimate government.